Hey everybody, Mark here, TekStack. TekStack is a revenue operations software provider. We have a platform that manages every step of the customer journey, including billing. We're going to talk a little bit about improving billing operations in our webinar today. So in the tech world, billing is pretty complex. We don't really have discrete products that you can stick on a shelf. The nature of the products are, at least the customers that we serve, very much dependent on human beings delivering those products to create value for the customer. The very nature of the subscription pricing models that we're dealing with today means that our customers need to prove their value year after year after year with the customer. And that, I think, has a big impact on how you bill for your services and your product. And so no doubt there's a lot of variables in play when you're dealing with billing at a software company or a service delivery company. We've got a bunch of different pricing model constraints. We have different products for different currencies. You have pricing model changes over time. You have various subscription terms. Some complications, related to when subscriptions start. Do you start on go live? Do you start when the software is installed? Do you start on the order date? Is that term going to be annually, multi-year, monthly? How does the renewal process work? Invoicing terms as well. You quite often get into monthly payments that have a different price than, let's say, the annual. And then you get into scenarios that on multi-year deals, do you invoice annually or all up front? And of course, when you're dealing with upsells and renewals, you get a lot of complications around co-terming. So let's say a customer bought 100 units and then halfway through their subscription, they bought another 50 units. Does that customer want to have two renewal dates, or do you want to co-term against the first renewal date? And what price are you selling a product the second time around? Is it the contracted price or the list price? Lots and lots and lots of complications in and around trying to manage subscription revenue and subscription billing. And then, of course, you still are dealing with service billing. And so we have projects that might be time and material based, where you have a set rate or a rate specified by a contract, number of hours, and basically collecting those hours each month and getting an invoice at the door. And of course, you've also got models that are more milestone based. So fixed price projects have billing milestones. When do you release the milestone? How does that milestone get out the door on an invoice? And of course, lots of other variations. You get into managed service delivery, and so essentially billing services models more like a subscription model, or you may be productizing your services, so you're billing all those services up front. Lots and lots and lots of variations. What we're going to talk about today is how to manage all that. Now, the typical issue that a lot of companies are facing with regards to billing, especially as they scale, is that it's highly a manual process. A lot of inaccuracies, and really the best way to deal with it is just adding headcount to the accounting team. And certainly that's one approach. And we like to present another option with some automation. But really, some of the stuff that you're trying to guard against, are scenarios like sending out renewals that are not the correct amount. So many times we've seen renewals either not getting out the door at all, or missing an entire upsell mid-year, or not including the COLA or contracted rate increases. You're quite often dealing with forgotten billing milestones. Again, we've seen this a lot of times too, where a customer is doing a project, the project manager doesn't let accounting know that the $50,000 billing milestone should get out the door. Accounting realizes it's too late, but by that point, the customer's got an issue with the project, and that $50,000 is at risk. On the opposite, you get into situations where you might be over-recognizing services revenue. So let's say on a fixed price project, and let's say the progress is 30%, but you want to recognize closer to 100% of the revenue you've already collected, but the project goes south, and now you're dealing with a credit situation. I've lived that scenario, and it's not something you want to do. Of course, you get other issues related to time and material invoicing, like how long it takes to get time and material invoices out the door. Get the time entries in, get them approved, get them reviewed, get them keyed, and send out the door. It's not unlikely organizations take 10 days or so each month just to get invoices out. Well, imagine being able to do that in a day. Now, what we're going to show today is a couple platforms. One is TekStack. So we call TekStack a revenue operations platform. That's fancy talk. Basically what it is what CRM is supposed to do. So it manages every step of the buyer journey. Your buyers are prospects. You win opportunities. Those opportunities get closed by the sellers. That opportunity generates an order, an invoice, turns on a project to be implemented, project to manage, goes live, turns over to support, and then you got a customer success motion dealing with renewals and upsells and all that kind of stuff. Everything on one platform. So we're going to show that. And then we're going to show something called Business Central, which is Microsoft's financial management platform. So it's when you hear about Dynamics 365 and all the growth, the vast majority of that growth is coming from Business Central. It's by far the market leading financial management solution for mid-market companies. And so TekStack has a very strong integration between all the revenue operations piece and the accounting financial management piece. Now, everything we do is Microsoft based. So TekStack's built on something called Power Apps. And that's a deep connectivity to Business Central and fully integrates to all the stuff you're using today. So you see all the little icons or logos down there, but Outlook, Word, Excel, SharePoint, Teams, Power BI, and of course Copilot. So why don't we get started with a demonstration, and I'll cover off some key pieces of functionality. Right on. So this is TekStack. Let's start our journey with the idea of a product library or a product list. So here I have a bunch of products in our database. We have 48 products. You may have a dozen products, 100 products, 1,000 products. It doesn't matter. We have customers that have over 1 million products. They're a box hardware company that mixed services and subscription revenue, but had tons and tons of products in their library. So let's say I want to look at a specific software product. And let's say I'm going to pick on this cyber risk product. So effectively what we do is we set up all the stuff that we can sell to customers as products. So that could be software, it could be services, it could be managed services, and again, it could be hardware. And the very nature of the product type kind of drives a lot of really important things. And I'll show you what I mean in a quick sec. So when setting up a product, you can have descriptions. So here's a description of the software product called Cyber Risk. It's a user-based pricing model in this case. And I can set up price books. Those price books are effectively mapped to price lists. So here you can see I have my Cyber Risk as a 1-year, 2-year, 3-year, and 5-year subscription, all for the US. So this product is only sold in the US or against the US pricing model. But again, here, if you had a Canadian, UK, Australian dollar, New Zealand, Euro, whatever currencies you want across whatever products. And of course, you can have different product prices set depending on the term. So we obviously see that a lot, where a 5-year price is a lot better than a 1-year price, etc. Here, I'm just going to open up the 2-year subscription product. So we have the price for that. We can capture our costs. This is great for VARs who have a cost of sale on the transaction, so we can calculate the gross profit on any given opportunity or order. We identify this product in this particular case as a subscription product, which drives a lot of other kind of settings. So one is determining when the subscription should start. So TekStack allows you to do a few different things. You can create a subscription that starts on the opportunity close date or the order date, in the case where the sellers, let's say, want to close an opportunity at the last day of the month, but by the time accounting rolls around and is ready to get an invoice out the door, it might take a few days. So you may defer that into the subscription start on the order date. but we also get situations where a specified date is negotiated, or we get into situations where the subscription starts on a project milestone. So let's say the software deployment or the go live of a project. So we can set all that kind of stuff up. You can also specify how long the renewal notice is. So on a 2-year term here, I'm telling the system, hey, wake up 60 days before the end date of the order, generate a renewal. And we can talk about that another time, but we automate the renewal process so that nobody forgets that there's a renewal coming up for a customer. And by setting it up a fair amount of time in advance, it gives the customer success team and the account managers time to get a read on the customer, book whatever meetings are required to get that renewal secured. And you're doing all that before we generate a renewal invoice. Because quite often a lot of companies, the strategy is, well, let's just stick the renewal invoice out, see what happens. But naturally it's much better to really manage the renewal as an opportunity. And this is what drives that. Now for invoicing as well, there's a bunch of different options for invoicing. You can configure it to this product to invoice on the close date or do not invoice. And then you can do that on in advance, monthly, annually, and quarterly. So this is a 2-year subscription. In advance means that you're going to do an invoice for 2 years all up front. Monthly is monthly, quarterly, and annually what that refers to is that a 2-year, you're going to do 1 year and then 1 year. So that's our product. So once you get your products configured and price books are set up, those products are now available for users or sellers to add to opportunities. So here I have an opportunity for Lyft. They want to buy the cyber risk product that I just looked at. So you can see here they've got a 2-year subscription. That's the exact product we just looked at. And here, in this case, because there was only one option available to the seller, the only option is to start the subscription on the close date. But here you can see that I can do it in advance, monthly or annually or quarterly for invoicing. So the seller can specify what the customer's preference is. Okay. And so you can see that this product has been added to the opportunity. It's a ARR of 60K. It's a 2-year deal. So the total amount of 60 times 2 is 120. You can see that we calculate all the money fields correctly, right? So you've got the ARR is 60, the total amount is 120 on the opportunity. We're able to separate if we had any services on here as well, that would show up here. And it's very easy to generate a quote document, order document, proposal document with one click as well. You can email it directly from the system. It's not the point of this webinar, so I'm not going to do all that. For now, I'm just going to close this deal. And the seller can add the contract that was signed, click win. Now this deal is read-only. It's inactive. And what happens is that the opportunity being closed, we're ready to create an order. Now, you could have the seller on close, have the system automatically generate an order right away. Now, more practically, there's typically an accounting review. So seller closes the deal, somebody in accounting or sometimes a deal desk function will review the deal to make sure everything's cool. So contracts attached, contract terms reflected in the order, all that kind of stuff. But they'll get a notification in Teams that, hey, good news, got to review this order, make sure everything's good. They come in here, click the generate order button, and now the order is generated. So if I go to the account Lyft, you can see now that this account is a customer. They're at the implementation stage. I've got my one opportunity, so I have no open opportunities here. But if I go to one, I have my one opportunity. That generated an order. So that order will show the end date so that everybody in the organization knows exactly when Lyft's renewal is coming up and how many of what products they own at what price. So you can actually drill in here and get a little bit more information, including all the history. So if, let's say, Lyft over time is piling more and more users on over time, you can see all that order history. And then we also set up the revenue recognition for each month. So, here on a $60,000 revenue a year, that gets spread fairly evenly, except for the first month and the last month. So in the first month, because there's 10 of 30 days, 31 days in May, we're only getting a third of the revenue, or 2/3 of the revenue recognition for the month. So that's all set up until the last month, where there's only a third of it. So all that gets set up, and then of course we have the invoice that's generated. So the software invoice gets generated, $60K. Again, this is a 2-year deal, but we're only doing 1 year up front. And so that invoice is ready to be sent to the accounting system, Business Central, which I'll show you a little bit about that in a quick sec. Now, a lot of customers they ask, why do we kind of set up the revenue, deferred revenue, and all that kind of stuff for the subscription? And the reason it's very, very important when you go to some of the Power BI reporting we provide, one of the key metrics for most software and service organizations is how much of your revenue is recurring, how much of it is contracted each month, and that's called ARR, annual recurring revenue. And tracking annual recurring revenue is not always straightforward. So what TeckStack does is, by tracking all this revenue information that gets sent to the accounting system, we can tell an organization exactly what their ARR contracted or run rate is, what their annual growth is, monthly growth. We can see what the ARR, recognized ARR, is per month by product, by customer. So here you can see all the customers that are running that specific product. Now that becomes extremely valuable as well, because we can start also getting into some concepts of average customer value and average and customer lifetime value. So we can analyze that kind of information over time. We can see, when I talk about renewal opportunities, we can see which opportunities, renewal opportunities, are coming up when. So here's kind of the lumpiness that I have in February for renewals. And I can see here in February 2024 that I had $1.8 million of ARR renewing with customers that have weak health, which can tell me that I have to do some work to make sure I secure those renewals. We can also see what the renewals look like by product. Very, very valuable information when you want to make business decisions, and we can go into great depth around analyzing this kind of information. And you want to know how much of your ARR is live. So here I have $12 million of ARR over 104 customers that are not yet live, which, if I was the CEO of this company, I would be really, really nervous. And so this information becomes really easy to get at. And then, of course, we get into some of those key retention numbers. So being able to calculate gross retention, which we used to just call retention, but now the concept of gross versus net, and where net is basically, I'm going to lose, in this case, 55% of my customers, but the ones that I keep, I sold them a heck of a lot more. So my net retention is 148. So typically you want to keep this number over 90, and this number anywhere between 110 and 120, you're best in class. But my demo database obviously is a mess, but you can see at least the information's there. So back to our story. We have Lyft here as a brand new customer. Let's check out our accounting system. So I'm going to fly over here to Business Central. Business Central, again, is Microsoft's financial management platform, specifically for SMB businesses. As great as we think our technology companies are in the grand scheme of things, 99.9% of technology companies fit into an SMB category by virtue that it has, most organizations have less than 1,000 employees. So this is the platform that Microsoft provides to manage financials for these kind of companies. And so in our model here, we had the sellers doing a bunch of work to secure a new customer lift. So in the old days, what would happen is they'd ring the bell, walk the contract over to accounting looks at the contract, goes to their accounting system, rekeys all the information. So they set up the customer. Now that the customer is added and the contact is added, now they need to create an invoice for that software order. So effectively, TekStack does all of that for you automatically. So I see here that I have, in the TekStack integration, I have a customer to review tile. And if I click see more, you can see here that I have lift. So lift has been added to this customer to review list. And so a few reasons we set it up this way. There's always a little human intervention, right? You want to make sure you have the customer applied to the right posting groups, which drive a lot of the downstream financial transactions, GL level transactions. You want to put sales tax information on this customer. There might be a credit approval process, whatever. So whatever your process is for adding a customer, but at least that has been presented to the accounting team, and all they need to do is fill in all the necessary information. Makes life really easy. Now what I'll do is actually save that for our demo. I'm going to actually go to a customer that has been set up already, and I'm going to show you how some of those transactions flow back and forth. And so here I'll go to our customer list. Okay, and I think I'm going to pick on Steinway. And so if we look here, I have Steinway that's been set up. I haven't posted any transactions, that's why you're not seeing a lot of stuff, but I have 3 sales invoices for Steinway. So what I'm going to do is go in and show you how this invoices from TekStack flow over to Business Central, and I'm going to actually segue from kind of software invoices over into service invoices and show you that flow. So let's go back to TekStack. Okay, and so the point of our conversation today, we're not going to show you a lot of the kind of project functionality and how to manage projects and all that kind of stuff. We're just going to talk about billing, but a key source of billing and where a lot of the volume comes from with our customers is services invoicing. So I'm going to show you 2 scenarios. So in TekStack, we have a bunch of areas in our software. So we have marketing, sales, delivery, which is that project management piece. We have help desk, which again, another conversation another time, and we have revenue. So in our revenue section is where we see all of our recognized revenue and where we see our invoicing information. So here's a quick homepage or dashboard that shows all the time and material invoices over the number of customers that we have. And I can also see all the milestones over the number of customers that we have. So the 2 types of service invoices that I'm going to show you here, the first one is a time and material invoice. So the scenario here is, we have a project set up, a resource assigned to the project, that resource entered time, that project manager approved the time, and now it's ready to be invoiced. So when it's ready to be invoiced, what happens is it'll show up into this view. So typically somebody in accounting or some sort of, professional services revenue kind of role, usually accounting though, will look at all of this, just to review that everything looks right. So they'll make sure the right rates are applied, or make sure that, let's say certain time entries don't exceed budget. Mark something as non-billable, or unmark something as non-billable, or send, even though the project manager approved it, they could send this back to the resource to get revised, maybe a description's required, whatever. I'm going to skip all of that, and I'm just going to simply rubber stamp this transaction. And so here I have a couple Steinway time entries here. I've got a $1,280 8-hour and a 5-hour, both at the same rate, $160. I'm going to grab those two. I'm going to throw them on an invoice. So here I could reject or approve. I'm just going to invoice these time entries. Okay, so these time entries have been invoiced. So they'll disappear from this list. And when I go to the invoices section here, okay, so here I have still updating, so let's give it a quick refresh. And so here I have my invoice that's generated for Steinway. And as you can see, my invoice lines combine the 8 hours and 5 hours naturally, right? You don't necessarily want to show all that detail as invoice lines. However, we do provide a supporting document that shows all the details of the time entry as well when you print the document. But that invoice is ready to be sent over to Business Central. You can see the Business Central sync status, so it's ready to sync, but it hasn't been synced yet. So that's a time entry invoice being created. The other invoice that we create is a milestone invoice. So this is a scenario where a project manager says, you know what, we've finished this important milestone on the project. I'm going to mark it as complete. When those milestones get marked as complete, they show up in this view, and they are available for accounting to go through the same process. So basically, accounting would be able to see all the billing milestones across all the projects in the organization, when they're expected to be approved. So you can see all the ones that are in the past, all the ones coming in the future. I can show you that view, but for the sake of time, we're just going to do the transaction. But the ones that are ready to be invoiced appear in this list. There's only one. Again, same motion, right? So you go in, click the ones you want to approve, click this button, invoice selected, yep. And so that'll disappear. And when I go to my invoices section, I'm going to get a second Steinway invoice here. So I have the 2081, which is a time and material, and I have the Steinway billing milestone that I just approved here as well. And those two are ready to go. Okay. So it's great. Now that they've been generated in TeckStack, let's see Business Central, and we'll go back to this customer. So here's Steinway. Before we had 3 that you'll recall. Now we'll see that we have 5 invoices for Steinway, including the 2 from the date today, 1 for 2080 and 1 for 12,000. So in summary, what we kind of reviewed was how TeckStack works as, we call it revenue operations, but call it a supercharged CRM. The very nature of technology work is that a lot of the front office functions drive the revenue process downstream. So we showed that opportunity getting created, one closed. When it's closed, we generate the invoices, we generate the subscriptions. The software invoices can, and the new customer can be mapped to Business Central. The software invoice can be mapped to Business Central. We then took a scenario where projects, so either time material or fixed priced milestones that are released in TeckStack, where all the PMs kind of live and all the resources live, and that information is sent to accounting in the accounting system. And so we saw that deep integration. So what's the net effect? You're never going to lose milestones. You don't need 10 days to close the month. As long as your resources are entering timely, you can get invoices out the door in a day. Imagine the impact of saving 10 days on 30 for invoice and revenue collection. And you're never going to miss a renewal or mess up a renewal amount. So with that, I want to thank you for spending 30 minutes with me today. If you have any questions, we're easy to reach. You can hit me at the email address on screen or hit our website. And with that, I hope you have a great day.